Good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA reciprocal of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same as it was at the end of last week. Sorry. So I'm, held some Palantir into the report on the short side. I'm not as big as I had been in this name in the past. It's just, we started to break out of that consolidation. Um, I sized down because it was breaking out, even though I really don't believe in it. And honestly, the report is great. The guidance is phenomenal, but this thing, who knows what this thing trades on, right? Like the guidance is phenomenal, but even with guidance that phenomenal, it'll take a million years for this thing to grow into its valuation. And the biggest thing that I have been pointing out with Palantir for the last month and a half is that it doesn't trade like the old Palantir anymore. That crazy momentum gamma squeeze name that we had known so well from that move from $25 to like 160 has kind of been gone ever since the last quarter. And I've kind of felt that at the end of October, the only reason why it broke out was just because of broader market strength, like forcing it up. It didn't really seem like it wanted to break out on its own. So it'll be interesting to see because again, the Palantir Gold, that guidance number that this thing just came out with, this thing would be at $250 by now. And instead they ripped it up to 222 and then they have sold this thing all the way back down. It just crossed back to the price in which it closed. So Palantir is now trading flat. And I tell you, this is not how the Palantir of old would trade. I really think that this name is done. But I think the whole market's done. I don't think anything's trading red anymore. It seems like we're being held up by thin air. Just like a new AI deal done every day. NVIDIA, Amazon today was what kind of held us up with a couple of other names. I'm gonna show you how lucky I got on this Palantir chart if I can even. Oh, they're not even going to show me the dot. Where is it? Where is it? Oh, look at that dot. Look at that dot on that after hours 5 minute chart. I do this thing where I front run the measured move. So the measured move was to 228 basically, and I put an offer for some size. You're not going to believe this at 221 spot 99. Look at that red dot, and that's some size. You can see me covering it on the way down. Um, there is no skill there at all. Let's make that abundantly clear. That is luck. That is 100% luck. I guess there's some degree of strategy of like, all right, this is what the measured move is, and I'm going to front run that measured move a little bit on an offer, but that is 100% pure luck to be able to get that fill and get that fill on uh like my typical like incremental order size. It was like 16x that. So it was, a lot of size for the amount of position that I actually filled there. So that's everybody gets lucky once in a while, but look, this thing's traded all the way down now, so let's keep an eye on that and see where it ends up. Okay, turning things back over to the big picture of the market here. Um, yeah, turning things back over to the. Is my voice muddled? How's it sound on the YouTube? Sound improvement. They're loving it on the YouTube. Richard here in the VTF says I don't sound great. A little bit. Was it muddled this morning too? Oh man, I don't understand why sometimes things work better and sometimes things don't work as well. I didn't change anything from a couple weeks ago. Well, you can tune into the YouTube because I'm live streaming on YouTube and they're saying it sounds great there. So if you don't want to watch the afternoon meeting in the virtual trading floor, I'm streaming this one on YouTube, and here's a link to that, and you can switch over to that if you prefer. And otherwise, I'm just gonna push on here. So I don't have a lot to add. I feel like I spent a very significant amount of time last week in the morning and afternoon meetings, really starting on Wednesday, um, kind of giving my updated thoughts on the market. And it's interesting because on October 24th, I probably gave one of the most bullish morning meetings I've given in a long time. And then by October 30th, I was giving one of the most bearish morning meetings I've given in a long time. Yet the market has not been able to give any follow through. So there's three main points, just to do a quick recap, that I emphasized on Wednesday morning. And then slightly after me, the great Charlie McElligott put out a note emphasizing four main points, including the three that I've been highlighting, plus an additional one that we also are certainly watching. So, just I guess a quick review of that has been the hawkish Fed, the President Xi meeting being potentially just not enough. Though we got a little additional clarity on that, I think, over the weekend that improved the sentiment around it a bit. Um, the strength in the dollar, right? This dollar that continues to break out, but the market has somehow been really ignoring it. Sorry, give me one second. Just got filled some stuff here. The strength of the dollar. So that should at some point have a negative impact on the market, but it has not been for whatever reason. And what I think is the most important one is Meta Oracle, right? Um, really starting with Oracle when we started to see the swaps get bid up, and the stock has been weak ever since it announced that earnings report with that deal. And then we've pulled out multiple shorts in Oracle on the way down here. And it just continues to look terrible, continuing to trade into the gap. And then the other one was this Meta report where I think there's a large contrast between Google and Meta if you just want to kind of look at their reports and what they've done since then. Um, in terms of the result of the spend on AI, it seems like Google, which interestingly enough is the cheapest PE out of any of the Mag 7s, is the one that is really executing things, I think, best of the public companies that we follow, at least. OpenAI is kind of in a universe of its own, and we can't actively trade OpenAI. Um, Google seems like it's the one that's been executing best, really giving a path to revenue for the spend that they're doing. Yet Google issued new bonds this morning as well, which I think is very notable. Meta is the one that seems like it's the complete opposite. It seems like they're spending like there's no tomorrow, but they just don't seem to have the plan in place. And we're not seeing the revenues come together, and they're increasing their spending even further, and they coupled that with the $25 billion bond offering. I think Google's was what? They did like a $15 billion US dollar one and like a $3 billion euro one. I'm just going off memory. Those numbers might be a little bit off. But you're starting to flood the market here with some degree of supply, just broadly speaking, for people's dollars. And the other side of that also is that these companies have the largest buybacks of any companies. And buybacks, by the way, the corporate bid is the number one buyer in the stock market, right? We spend all the time analyzing all the flow of funds, the systematics, the retail, blah, blah, blah. The number one buyer, the most important out of all of them, is the corporate buyback. And it seems like it's been the most unstoppable one and continues to increase and continues to increase. But we might see a slowdown of buybacks as their capex continues to increase. And then Oracle obviously is the one that is free cash flow negative. So now we've gotten through these earnings reports and we can really see, all right, Google, great. Amazon traded great, but off of AWS and the AWS growth that no one was kind of expecting. And then they had the OpenAI, NVIDIA, Amazon deal today that boosted that thing even further. Otherwise, it kind of closed on lows on Friday. Though I think that Amazon deserves to be up from that report. The AWS growth was unexpected and solid. But you turn things back over to the market, we had coming into Wednesday a market that was extremely extended to the upside with this kind of confluence of negative factors that seems to be coming in at once. And Wednesday, after making that call, we close on lows. Then we got saved Wednesday night by Amazon's earnings, along with the Netflix split and Apple. And they still sold that down for most of the day. And I know we didn't close on lows, but they sold it down for most of the day. And then once again, we gapped up to 685 for the third time in a row. And at a certain point, when they keep gapping us up like that, it becomes harder and harder, I think, for this market to break lower. So I was a little bit more nervous this morning, but I like the idea of still trying to stick with the short, at least initially, and seeing what happens. Yet we still can't manage to break any levels of support with this market. So the flip side of the negative macro stuff I just described is the bullish technicals and the bullish seasonality, and that has to be respected. Uh, the market had gotten to extreme upside extension, a short-term tactical indicator that we like to look at was in the red for 3 sessions in a row. The way that I measure extreme upside extension was at extreme for 3 sessions in a row. And as a reminder, it's very rare for either of those to last for more than 3 sessions in a row. And that's what we got, 3 sessions in a row. And then we got the technical pullback. But now this correction in the market from that extreme upside extension is turning into both kind of a price time correction. And that price time correction is actually starting to form a little bit more of a bull flag. Now you can argue underneath the surface, well, things seem like they're trading a little bit different because we keep gapping up and selling down, and that's kind of new for the market. But you have to reckon with the fact that this is still technically a bull flag that the spies are building out. It's a bullish consolidation. The ADMA is caught up totally. The Qs are more or less doing the exact same thing. They had hit extreme upside extension. We had $17, I think, of extension from the ADMA on the daily chart for a couple days in a row there. And that didn't price correct all the way down to the ADMA, but the 80, we don't have the same degree of extension for sure now. We got $7 of extension as opposed to 17 off the ADMA on the daily. So seven's still moderate. And this part could probably use a little bit more corrective action. But broadly speaking, these technicals are bullish. And it's right as we are going into the most seasonally bullish period of the year. And that seasonally bullish period of the year comes from a number of factors. Two of the bigger ones, though, are the corporate buyback bid. August and November, I believe, are the two largest months for the corporate buyback bid. And we just discussed how the corporate buyback bid is the number one flow in the stock market. It's the number one buyer of stocks are the stocks themselves. And November is a big month in which they do that. So I'm going to guess on average, you've got $8 billion worth of buying per day over the course of the month of November. So keep in mind, if the market's going to be able to go down, it has to be able to overwhelm that $8 billion of buying that actually comes in each day, as well as the positive gamma, which is probably a few $1 billion at least right now. So now you're at like $11 billion. So in order for the market to go down by more than 1%, you need enough selling to come in to overwhelm $11 billion of kind of forced buying that's going to probably be coming in on average. It's very difficult to do, and it's very bullish. And if you can't go down, then a lot of times you end up grinding up, right? It's not impossible. And then on top of that, November is typically a really strong month for retail. Now, retail's always a little bit, you can't model retail buying and selling, I don't think, in the same way that you can model like the CTA and vol control buying and selling that we pay attention to, that's so impactful. But there's trends and things like that that you can look at. And I thought that this one chart that was in Pat's note this morning, I'll pull it up here. Um, and Bill K and the VTF giving us a chart on the buybacks, I think that you guys can look at. But there's one chart that Pat posted here that I think is a little bit interesting on retail. It's not retail, it's across the board, but we know a lot of this is coming from retail. And it's the net bullish opened options positions. And you can see at the end of 2020, the beginning of 2021, you had this spike to the largest amount of, and I think this is a week over week chart, but you can see that you had this spike to the largest amount that had ever happened, and that happens at the top, of course, right? So that happens at the top, but when you're not at the top, you keep going, and the bull flow keeps coming in, and you keep going, and I think Charlie McElligott has a great comment on like the gamma squeezes about how they eventually fall upon the weight of their own delta or something cool, really cool sounding like that. But you get the massive up moves to begin with, right? And that's been the big thing that we've spent so much time looking at recently is all the financial engineering, the zero DTE options, the increase in option usage overall, the levered ETFs, how all of this leverage, all of this financial engineering is having major impacts on how markets themselves actually trade. And this has been very significant. Like I, it's been a slow rise, but I feel like in particular, a lot of this stuff became really significant and has become increasingly more significant really since starting with the COVID period. But that was the largest period of all time. And then this period we just had surpassed that. And at the same time, we're looking at all these like RGTIs of the world, these pre-revenue companies just going completely parabolic, completely insane, completely, in my opinion at least, um, away from any reality of fundamentals or anything like that. Like these companies, they don't even make money. Um, but it's that retail flow, it's that retail options flow, those leveraged bets that are coming in that are forcing the market makers to then buy the underlying stock, which then squeezes all of this higher and higher and higher. And then suddenly you have this really quick, going back to that chart, pullback in that options buying. And it seems to be because these shorts went parabolic, the retail buyers kept buying, and then all of a sudden they haven't gotten paid. They're not getting paid anymore. And they don't have those profits to roll into the next week and the next day's strike that's coming in, and potentially some losses are coming in, and they're not going to be as aggressive. Like that's how that cycle really works for a lot of this stuff. So, November tends to be, the strongest month, I believe, of the year. Um, I think that we've been positive 20 of the last 21 Novembers. It's got a, really good hit rate and a couple percentage points on average. So it's a really strong month. It's a really difficult month to fight. The corporate buyback bid will be there. But I question actually whether retail will be there. It'd be interesting to see as strong as it was in September and October, which is such a bizarre thing to say because September is usually a lull for retail, and then November is where it really picks back up. But we had just been seeing the data that has just shown that in September and October, especially this crazy pullback that we had on October 10th, retail saved the entire market as far as I'm concerned on that day because we had pulled just right to the cusp a lot of these more major systematic sell triggers from like the CTA community, but we never broke it. Why do we never break it? Well, when we went and saw the retail data, we knew why we never broke it is because retail was just buying the dip in a really wild fashion. So as we see now that the parabolic move come off on the market, and you see the call options slow down a little bit, that degree of bullish bets that are coming in, I can't help but wonder if you're actually not going to get retail to be as strong in November as they traditionally are, I want to say, compared to September and October. So is there a chance that at a certain point you could get enough selling in this market based on the AI trade potentially showing some weakness, the Fed being a little bit more hawkish, the dollar continuing to get stronger, that those major four factors that we discuss, is it possible that selling from those four factors could overwhelm the forced buying from the corporate buyback bid and the gamma that's out there right now? And I'm going to say that it's probably going to be difficult. It's probably going to be difficult. I don't think that you want to be having any real serious major bets against the month of November or December or this final part of the quarter of the year. But it's not impossible, and we need to just continue, like always, to pay attention to our levels. Can we lose this 680 in the spies as a starting point, right? And that wouldn't get the market bearish by any means. That would just be a starting point where we actually broke a level. The significantly more important level for the spies to pay attention to is down at like 675. You can lose a 675, especially now that the 21 EMA is caught up to that price. Then things maybe get a little bit interesting, and those sell triggers. Oh, perfect, Bill. Perfect timing. Those sell triggers keep, slowly working their way higher. So the short term sell trigger for the CTAs per the Goldman Sachs note is 66.79 right now. So 66.79. So that brings us to somewhere on the October 22nd tail. Going back over the spies just to try to get a price roughly. It's like 666. It's probably roughly like 666 in the spies. And in fact, we actually have seen a lot of bear flow that's coming in as well. And I haven't even discussed, the fact that we've got the election this week and that the government is still shut down, which has not impacted the market at all. So is it possible to be able to actually have a red November? Well, how did we close today? So far, not so good. It felt like such a weak day today, right? It felt like today was a bloodbath in the beginning of the day. Turning over to the 5 minute chart of the spies here. This gap up sell in the beginning of the day was like, oh, wow. And keep in mind, and I assume that Bill's chart shows this, um, that corporate uh, buyback bid is still increasing right now. It's not even max. I think it turns max on like November 6th or November 7th. So really, you still have a couple days here where you don't have the full corporate buyback bid turned on, where you can maybe try to have this market push some downside a little bit more easily than otherwise. But it's not going to be easy. I mean, even today, we were so weak off the open. Non-profitable tech got slammed. These patterns that we've been talking about, these daily chart wedges that were starting to break out a little bit in the last day of the month, like an RGTI. I thought that price action on Friday was very questionable. It seemed very forced to me with the mutual fund month end stuff that we were talking about. We were looking at RGTI, or QS was another one, and they fully negated that QS today pretty much. They wrecked this stuff back down. The quad U finally broke today also, though it's got earnings tomorrow morning. We'll see how that goes. Finally broke below 20 and confirmed it with a close below 19 and closed on lows, and looks terrible unless the earnings report can actually save it. Um, so we'll see, I guess, is the bottom line, if we can never lose some support levels. But that CTA sub trigger is very far away. Like I would love to see. So on a down tape over the course of the next 1 week, you get $7.84 billion of selling out of the S&P, out of the US. In a down tape over the next month, you get 67.2 billion. Like, you need that stuff to trigger to attempt to overwhelm the corporate buyback bid if you're going to have any chance of seeing a negative November. It's just so hard, and it's so interesting because it's like, if you want it to be a bear, there was a lot of factors on your side in September and October that are not on your side now. And now it's like you really need not just positioning to bring the market down. As a matter of fact, positioning in and of itself is not going to bring the market down. You really need like the event risk to overwhelm the forced buying that's going to come in that otherwise creates such an incredibly strong November. So, bottom line is, let's watch how this pattern plays out. It's certainly a bullish pattern. There's a lot of big bad, I think, big picture negatives right now, but it's hard to realize those, right? Like, how many times have we come up with examples in recent history here where you see all of the negatives building out and building out and building out, but you can't actually get the market to drop until you get the right time in terms of the flow of funds information coming together to enable the market to go down. And if you think about it like that, November's probably not your month as a bear, but not impossible either. I do remember trading that. I think it was 2018, when we had a negative period here in November and December. It's just pretty darn rare, and it's especially rare when the market's already up into it. The strength when the market is up into November tends to make for an even stronger November than average. So it's really hard to fight. Um, Trying to think if I have anything else really to discuss. My big focus today was just on the non-profitable tech stocks that were getting wrecked, and turning over to the 5 minute, like short RGTI got destroyed, short QBTS got destroyed, short Quad U got destroyed. Um, it's interesting to me to continue to see crypto getting taken out. I guess Bitcoin via the IBIT ETF did manage to hold some support and close off of lows, but like Ethereum looks like it's getting taken out back, really bad, breaking $28 support, closing on lows, really gross. The Solana ETF that we like to look at was even worse. So we'll see. But crypto is looking pretty bad to me, along with non-profitable tech getting hit. It's just, and that's another thing that I've uh, mentioned that has not come to fruition at all, which is at a certain point, like in this crypto sell off, I mean, the sell off is going to be in a bear market, right? At a certain point in this crypto sell off, especially because you got all the ETFs, I would think that margin calls in crypto land would actually create forced selling in the equity market at a certain point. That's another thing out of many that has not come to fruition in terms of a thought process. Because this stuff has been getting destroyed, and it has, we've seen crypto lead the equity market so often, and it has not been doing that. I would have killed for the S&P to look like IBIT for the month of October, but instead we just got one big down day, and retail saved it, and we were, then having the VIX come down, and the VIX, crush market squeeze back up post our little VIX squeeze that we had. So that's all that I've got. Nothing too new, honestly, nothing too specific. But if anybody's got any questions on on that or on anything else, I'm in no particular rush and happy to answer them. Uh, Not seeing anything in the VTF for the moment. Over on the YouTube, is the VIX up due to Fed hedging? I think it's a confluence of factors right now that has had the VIX be a little bit stronger. I think it is related to the election. This is not a presidential election, obviously. It's a midterm election, but there's some importance around it. And if you remember back into the presidential election back in October, um, you saw the market because you, my entire this was not an anomaly. There's been so many anomalies. I feel like over the course of the last calendar year, just in terms of a lot of the stuff that I typically look at. This is the first presidential election that I've ever created where the market didn't sell off in front of the election. Usually, the market sells off in front of the election as the VIX spikes. Then the election occurs, the event risk is over, and this doesn't matter who wins, Democrat, Republican, whatever. It's been the same pattern my entire trading career. And then the VIX crushes all the way down, and then the market rips all the way back up. Back in October, the market never went down, but the VIX went all the way up. And then when the election ended, it was similar but different to what we just saw in October, where after the VIX squeeze occurred, the VIX came all the way down. It forced the market buying. Back in the presidential election, the VIX crushed all the way down, but the market had never sold off. So the market just went on that crazy run for that 3 day period to extreme extension all time highs before giving a little bit of a roll down before new highs actually came back in again. So it's probably some of the VIX elevation right now is probably due to the election. And we did trade well off of highs. And, maybe to some degree the government shut down at a certain point, but that hasn't mattered at all. How short am I now? I'm probably, I don't know, like at somewhere between half and 2/3 of what my max size had been. Size down on the breakout, size down in the breakout, size back up a little bit. Starting on the Wednesday of last week, more or less. What else, guys? Any other questions? Yeah, I don't think there was too much new to talk about for today. Like today's daily candle ended up very similar to the candles from the last two. There's no new technical breaks. We don't have any new real data. Um, from a flow of funds perspective. No major updates from earnings reports because it was a Monday today that are big game changers. It's kind of the same stuff we've been talking about. Watch Meta, watch Oracle, watch the market levels, watch the AI trade, watch the TLT. TLT is another one. Hit this TLT all the way down, all the way back down. No impact on the equity market. Dollar breaking out. No impact on the equity market. Bitcoin, crypto breaking down. No impact on the equity market. All this stuff you would think could be having an impact on the equity market, but the flow of fund stuff I think is just still too controlled. So if nobody has anything, then I'll do a short afternoon meeting and I'll wrap it up. Going once, going twice. All right. Have a great night, everybody. I will see you all tomorrow.